Tesla's puppy trades. Thank you guys so much for the incredible feedback on the Apple YouTube video. I'm so glad you guys liked it. So I thought, why not pick another one of you guys' favorite stocks, Tesla, and just do another video update here. So, there are some things I want to look at, but right now, let's just get to the projection. Okay, the first thing I see, we have a run right here that is from 811 to 9-1, right? This was a big run, right? This was very hard to predict. No, it wasn't. I actually made this prediction right here, August 10th. See, August 10th, bulls, come on. Stop loss below 1400. This would have actually gotten stopped out. Luckily, a lot of my followers know that that's not an invalidation level. As soon as the stop, level or the pivot level is recovered, as I explained to him right here, looks like the dip below 1400 was the stop rate, 2200 coming in the coming weeks. I said 2200 was coming by September 18th, right? And of course, you guys were like, that's, you're insane. Like, you need to check into rehab if you think Tesla's going to hit 2200 by, September 18th. And I should have, because Tesla hit 2200 by September 1st, right? And as soon as Tesla hit 2200, it, cut down. So I am not just out here, making hype tweets for Twitter followers. I've been studying the market. I've been doing this for a while. I don't read the news. I don't care about battery day. I don't know, I've never done fundamental analysis in my life because, that's for people who read gossip columns. And I don't read gossip columns. I do math. All right. So Tesla goes on this beautiful run from 811 to 91. Okay. And it goes, from 1400 to, 2200. These are pre-split prices. So then what happens, right? It hits my $2,200 price target and it sells off. Now, a lot of the wave people are going to say, where's the ABC correction? Puppy trades, where's the ABC correction? There's A, there's B, we got to be going down here, right? Well, guys, stocks fall faster than they rise, right? That's what all the bears say. Well, that's actually a terrible reason to be a bear because that means most of the time you're going to be wrong. And stocks do fall faster than they rise. So this correction is likely complete. And a lot of people, doing the wave counts, they're like, we got to have A, then B, and then wave C. Then I'll buy it, I'll buy it 300, right? Here's one thing you need to know about the stock market. The calls for the market to go lower are always after the market's already gone lower, right? Like everyone thought the market was going to go lower in April because the market had already gone lower, but that correction was over. And then what happened? That correction gave us fuel for a massive rally that really didn't end until right here. Okay, so we have this move, and it looks like this is a major low. Okay, so what you're gonna do, just in general, you're gonna take the length of this move, and you're gonna place it at this low, right? And until this low is broken, as far as the Elliott wave theory, standpoint goes, you're bullish Tesla. And the longer the Tesla stays above this low and consolidates, the more likely that Tesla's about to explode higher again, okay? So how do we know Tesla's consolidating, right? Because it's staying in a tight range. Everyone's bored. No one wants to be buying Tesla now, right? Because, we're not having TikTok investors talk about this stock. And look at this declining volume right here, right? So we know that this sideways movement is consolidation because the volume is declining and the volume bars are getting smaller and smaller, okay? So what do? We did have a major reaction off this low. We put a high here, we put a low here, and, we've been consolidating ever since. So what I do, this is how you use Fibonacci's in your trading. You take the high and you take the low and you go to the negative 78.1% extension of that correction. So that's what I always say. If you're on the 6-month chart, this is the 9-month chart, 6-month chart, 3-month chart, same thing. If you're on the 6-month, 9-month time frame, and this is not, the start of, super recession, then that means that we're going higher, right? So if we are going higher, how do you find a price target? There's a few ways. You take equal legs and you place it at the low. And another thing you can do, you take the prior correction, you take the negative 78.1% retracement of that correction, and this is actually a conservative price target, okay? So right now, it might sound crazy to think, Tesla's going to be at 550 What are you talking about? That's actually very conservative. That's just the length of this move placed here, right? Even we have a mini bull flag on the smaller time frames where, just this little bull flag playing out takes us to 500, right? Everyone said, oh, puppy trades, you're crazy, when I said 2 days ago that Zoom was going to hit 640 in October. Well, guess what? Zoom's at 560 now. Now it seems conservative to say that Zoom's going to hit 640 in October. So let's keep talking about Tesla. We have this sideways consolidation. Okay, we connect the high with the low. We've got a few reactions on the pitchfork. So here's what I'm saying. For now, we're just going to talk about the next few weeks. This median of the pitchfork is going to be reached, and I'll show you guys in a second that there are other pitchforks that we can look at. But let's just talk about shorter term, and then we'll get to the broader picture. This median, we're heading for the median. We have a lot of evidence with this declining volume that we're heading to equal legs, which is 557. And then with fibs, we have this negative 78.1%, retracement of the correction. That's giving us a very conservative, very nice, very reliable 548 price target. Okay, so now we've got that. My price target is 548. My time target, this move took 3 weeks. We put in a low right here, and we're consolidating this move. This move right here took 1 week, and then we put in a low. So right now, we're expecting Tesla to hit 500 next week. I am expecting Tesla to hit 500 next week, and I'm expecting Tesla to hit 548 by the end of October. When would a projection like this be invalidated? That's a tricky question, right? Because invalidation is not the same thing as a stop loss. You can't have a stop loss at 351, right? You can't have a stop loss at, Tesla to 548, stop loss at 372. That's not risk management, right? The invalidation level for this, let's just say, even if the invalidation level is, 406, that's still too wide of a stop. So I've got to take these lows and I've got to figure out the stop loss. The stop loss that I put is rarely the invalidation. And I'll always clarify if you guys ask, there's only 140 characters in a tweet, what the actual invalidation level is. Let's just say right now that this will be invalid if Tesla goes below 406. Okay? But for a stop loss risk management perspective, if you're entering a new position on Tesla, 406 is a little wide. I think this low right here of 426.46 would be a good stop loss. So let's just say we're expecting Tesla 500 by the end of next week. That's taking the length of this in time and price placed here. We're already halfway there. It's very easy for me to see Tesla testing all-time highs next week. This would line up with similar things we see in Apple, Apple, Facebook, and did you see NIO this week, like the EV sector, workhorse, So we are expecting 548 by the end of October, 11.5 at the latest. So I'm expecting a huge run up into the election. But right now, what I want to do is I want to clear this chart a little bit and let's look at the bigger picture for Tesla. What could this be in the long term, right? I'm a big EV bull, but I'm not a big EV bull fundamentally. I have my different reasons. And let's look at this right here. We have an election coming up. It looks like if a certain team wins, that electric vehicles are going to get a lot of money from the government. And American car companies, I actually have a big background in supply chain. If you're getting government money, you have to be based in America. There are tons of incentives for, any type of, federal grant, any type of purchase made with American tax dollars. There are tons of incentives for those people, those procurement officers that they've got to do, they've got to have an American company. But what could this look like? On the big term, this could be a massive bull flag. We have 1, 2, 3, 4, 5, potentially a corrective wave right here. What if this is a large bull flag on, the 1 year chart? And we just broke out of it with declining volume, So how did we know that we were going to take another leg higher? I have it documented in my tweet. Declining volume, bullish consolidation, right? We go to the equal legs price target, we close the trade, we take profits. Declining volume, we're going to have a volume breakout, which will give us a timing signal, and that's bullish consolidation. But what could the bigger long-term picture look? I've already said, we're looking for 548 before the election. We're even looking for 500 next week. Longer term, it looks like this is a massive bull flag on the 1-year chart. So I think if you're a long-term investor, this is what a lot of investors will make the mistake of, especially when they're new in their career. They see the price going higher, and they'll say something stupid like, "Oh, this is overvalued." You don't know what overvalued is. You don't. You're a human being. What are you talking about? This is overvalued. Like, do you think you know more than the entire rest of the world, the entire rest of the global economy that is participating in the share price of Tesla? And you're saying this is overvalued. I'm saying this is a large bull flag with declining volume. And long term, Tesla's going to be at 755 next year. Probably by March of next year, Tesla's going to be at 750. I'm doing no fundamental analysis right this. This is a bull flag. It's consolidating into a large triangle, and we've got declining volume. So right now, if you're a long-term investor, I told all my loved ones when Tesla was right here, getting shares. Getting shares right here. This is Tesla. This is the largest holding of the Nasdaq QQQ besides Apple. So if you're bullish the market, you're bullish Tesla, you're bullish Apple. This is the best way to get inflation, right? This is the best way to protect yourself from inflation. We talk about the money printer going burr. We talk about Jerome Powell, zero interest rates, quantitative easing. All that money that is being printed goes to the largest market cap stocks. I'm looking right now at Tesla. That big dip was a gift. Okay, so if this isn't the crash, right? This is the scenario that all the bears want. If you have a subscription service marketer, they're telling you that this is going to happen, right? That's not going to happen, because I can assure you, I was right here. They all said that this was going to happen, and it didn't. All the subscription service people, the people who were following them blew up their account. Here's why. The subscription service people are always going to be bearish. They're always going to be bearish. And why? Think about it. Have you ever gone on the news and just seen good news? Have you ever turned on Bloomberg? Have you ever turned on CNN? Have you ever turned on Fox News and they were just, hey, everything's great, go outside, enjoy the beautiful weather? No. They're companies, they're businesses. They know fear sells. So all these subscription gurus, they're never going to say, oh yeah, the market's going to go up. You buy the dip. It's been going up, for 100 years, No, they're always going to tell you the crash is coming, right? But that's the funny thing about, trading. The calls for the crash always happen after the crash.